Bitcoin liquidity is on the move. Will Jpow'S words wreck or rally markets tomorrow after the FOMC Fed rate decision meeting and, of course, that press conference that follows? That's where the real action happens. I think tomorrow's meeting is going to be a nothing burger because the whole world knows there's not going to be a rate cut tomorrow. Not going to be a rate cut this month. But historically, Fed Chair Powell's words tend to move markets, especially in the Q&A section from the press immediately following. So we'll be watching for that, of course. The liquidity dynamics also have a lot to do with how much volatility we could potentially see tomorrow as things have been shifting in the order book here today. So first thing I want to do, actually, bit of housekeeping, of course. Live chat is open. I forgot to actually post this in the Telegram group, but live chat is open. So if you want to join me, I'd love to engage with you. We have lots to talk about today as, we're on a bit of a pullback from that, from Friday's high, and we're testing some key support. And I'll be honest with you. I'm pleasantly surprised by the fact that the yearly open has been holding so far. So you guys know what to do. Go ahead and smash the buttons. Help me grow the channel. Hit the like, especially hit that subscribe bell up above so you don't miss any of the streams. And if you want to engage, by all means, let's do so. Bring it on. Let's go ahead and dive in. And we're going to start here on the charts with the new timescape levels indicator that my partner Fred has developed, and we've got this one in testing at the moment, and going to share it with our Premium Plus community pretty soon, and then give them a chance to bang on it for a little while, see if we want to do any fine tuning before we release it. But so far, this thing has been rock solid, and I want to show you exactly what I mean here. This is the timescapes levels indicator, and what it's showing, what it's marking here, is what the yearly and quarterly opens were and the week thereafter, right? So yearly open was right here, and this is first week of the year, and we, same thing, quarterly opens, first week of the quarter, et cetera, et cetera. So our yearly open was squarely at what price? 93, depending on what exchange you're on. Here was 93,576 on Binance, it looks like. And today, let's just confirm that. January 1, open 93,576. And today, where do we go? What was the low? 93,377. So we did nick it here, right? It was a little bit different. I was looking on Bitstamp earlier, and it was a little bit different. So this one, within $50. Just a hint of a wick through, and I'm for better or worse, I'm actually glad to see that, because those wicks tell me something. I was, looking at this morning as I was watching this on, like I said, on Bitstamp. We had not penetrated that. It was at 93,376, and the open on Bitstamp was at like 93,350, something like that. Let's see. January 93,347, and today we went to 93,376. So this one held by about $40. And on Binance, though, as you could see, we did wick through it just ever so slightly for just a moment. So is that tremendously significant? No, but I will tell you this. I was surprised that the price, and I remain surprised the price is holding here after the rejection from 98K. Now, what surprised me even more is what happened in the order book. And this is going to be really the basis for today's analysis, is what we're seeing happen in the order book and how this might affect volatility tomorrow. Now, if things break down from this level, I think there's a lot of technical, I know there's a lot of technical support in this box right here. We have the 21 day moving average. We have the 200 and the 100 day moving averages are all in this box, but also the 100 week moving average is in that box. And that's one I like. And I'm going to show you why I like that one as I go back to my previous chart. If we look at that weekly, it has some confluence with this prior support level. Okay. So this around 91.5, 91.6 could come into play here by the end of the week. And why do I think that we're going to have this, a pullback? Couple of reasons. Number one, we have down here, you can see this red dot. That is a down signal on the trend precognition A1 algo. And it is indicating that price not likely to go higher than it did last week, meaning we are not likely to crack 98K this week. Now, Powell could throw us a bone tomorrow, and that could change, right? This could obviously change, and things do change, so we need to be prepared for that. But even if we just grind down in this range a little bit further, that would show some weakness in this 2025 open. Seeing the strength here is very, very good to see. It's very bullish, I would say. But I expected to see a crack in this. So that's why I was interested to see that just slight wick happen on Binance. Now, in addition to that, I think that what we could see develop is a potential short squeeze. Right now luring in some shorts, and I'm going to show you why. We'll head over to FireCharts and look at what we have happening here. So this is as price was approaching that yearly open this morning. 17.6 million in bid liquidity showed up. Actually, more than that because it was stacked below another 5 million. So over 20 million in bid liquidity showed up to defend this level. It looks like this was actually pulled before it was hit, and price began to move up. We also we saw brown whales dump, but they didn't unload high volume. In fact, this was only, let's see, we were at 3.3 million. It was 2.5 million roughly. And 2.5 million does, last time I checked, 2.5 million does not penetrate 17 or 21, 22 million. The totality of the whole move, let's see what that was. Let's see if that was enough. But this could have been hit. I wasn't watching it, and the resolution here makes it a little bit difficult because when you're watching it in real time, you can see if it's getting hit. But after the chart updates, these go into 5-minute intervals. So this was, let's see, minus 124. 153. So potentially hit here, okay? And that would make sense because we now have this ask wall up above. But notice every time price approaches this, it gets reinforced. We see more ask liquidity showing up, right? It went from 17 million to 19 million. So another 2 million showed up. And then down to 18, back to 19, 17. And then, like every time price gets up there, more ask liquidity shows up, and now we see even more trying to hold this in place. But it looks like purple whales are buying into this, right? They are. They're going to eat through it right now as we speak. This getting taken out and filled. So this is I felt like this was here to attract some shorts, and now those shorts are about to get squeezed. And, I saw two potential scenarios for this. It could have been a guardrail to hold price in place, which clearly is not happening. Or it could have been here to attract shorts, lure in some shorts, and then squeeze them. And that seems to be what's happening here. So with this being gone, all right, this will be in the next few minutes, this is going to disappear. Then we have a new kind of range that price can trade in. And if I zoom out, this is now about defining what kind of range we have for volatility here over the next 24, 36 hours or so as we head into the FOMC, rate decision and Fed Chair Powell speech. So my thought is, there's a basic principle here. The basic principle is that liquidity dampens volatility. So when there's a lot of liquidity in place to hold price in place, a guardrail, if you will, then price has a difficult time penetrating that. So I think that 98 still remains intact, unless, of course, like I said, Powell throws us a bone. That would invalidate the new trend precognition signal. But in terms of what's to the downside, there's really just not a whole lot here. Okay, so I had pointed to that box of where all those moving averages were consolidating on the daily. And that basically is between the 100-day moving average, which is at about 89.9. All right, we'd call it 90, just shy of 90K, up to the 21-day moving average, which is right there at 92.61. And what did I say? What did I say my range was? I was looking at this prior support level at 91.6, and you see the 21-week moving average is also right in that range around 91.8. So I really like this level right here as a potential target for a pullback if if this doesn't just turn into a runaway train right here, right? So this is really what I'm watching. And what's going to develop between now and then. It is very common when we head into these events for price to range top to bottom, to clear out the liquidity that's in here and make way for volatility around this event. And I think we're seeing exactly that develop right now. I think this is going to be gone, and I think that we will have an opportunity to go higher. I do not think at the moment, I don't think that we're going to penetrate 98K. That can obviously change. Now, I'm not saying we're not going to 98K again. I'm just saying I don't think we penetrate it this week. I could see a run up close to that and a rejection. But in the meantime, let's see what's happening here. Okay, so a little bit of movement, right? We've taken out this level. We have another rung of ask liquidity trying to slow things down up here. And it's going to be very interesting to see if this is able to grind higher and higher. What I am noticing here, you see purple whales here. Purple whales historically have dominated Bitcoin price direction, and they bought this dip as a group. We see market buying here on the bin CVD. Those purple whales bought this dip and have continued to buy into this liquidity here. How this plays out tomorrow, time will tell. But thin to the downside here. So there is room to get, very easy to go back down to support. And if we got a double bottom support and it held once again at this 2025 open, that would just be a tremendous sign of strength. But the fact that we got this teeny tiny little wick in here gives me a glimmer of thought that we might just go down a little bit further and explore this area. Like I said, the 21 week is really what I think is the most attractive target and the most viable target here. And this would be, these would be a backstop if things break down. I don't think we're plummeting down into the, low 80s or 70s this week. Again, unless we have just a nasty catalyst. My expectation tomorrow, of course, no cut. The whole market thinks no cut. And that is evidenced here on the FOMC Fed Watch site, which declares that, let's get an updated version on this. 97% of the market thinks no cut tomorrow. And so perhaps probably a safe bet that somewhere around that conference, the president comes on and says how much smarter he is than Powell and that he should cut. And that won't matter because Powell isn't going to flinch on that. He hasn't flinched yet, and he's not going to flinch now on that information or on that speculation. But Trump has also been, how should I say, teasing a very important message sometime between now and Monday. And my guess is he is going to wait to see how the market is reacting, and he's going to say something that will help the market recover when it goes to the lows. So if we get a swing low, that's when I would expect that Trump statement to come out. Allegedly, it's not related to tariffs, but who knows with this guy. So just know that he's there ready to throw the life raft. In the meantime, In terms of where liquidity where price could range to, we do have a bit of support. This is not a lot. It's less than $5 million here at 93.5. That is currently where the 2025, where the yearly open is. So this is all we have protecting that level at the moment. Now, if price approaches, we might see this get fortified, but at the moment, that's all that's here. And so if price goes lower, I told you I like this 91.5. So maybe there's enough insulation here to protect that and keep price from going down further. A lot can change between now and then, and this is why we monitor order book liquidity, why we monitor these liquidity dynamics, so we can see if more bids are stacking or more asks are stacking, or if they're moving in either direction, to give us an idea of where price could go and where the trend is going to shift to. And then, of course, we're watching what whales are doing. And when purple whales are buying, I'm paying attention to that. And so at the moment, it seems like they've got some sentiment to eat through this and maybe take it up one more time before the press conference. And I would not be surprised at all if we made it back up to this level and then rejected, cleared everything out as we headed into the FOMC meeting and press conference. And then, well, where we end up after that is largely going to be predicated by the tone of Fed Chair Powell and any nuggets, any breadcrumbs he drops. His prepared statements are pretty calculated, and we kind of know what's happening there by the time the meeting's over, because there's a recap of them before the press conference. But once he starts getting interviewed by the press, sometimes, not all the time, but sometimes he will reveal something just in one of his answers that will give us a nugget of information, a breadcrumb, if you will, that we can maybe apply more towards the macro outlook. And that's what I'm looking at this point. Really difficult to trade in this environment with the uncertainty around tariffs and everything else that's happening from the executive branch, and with the shakeouts. I've built a long-term position, and I'm pretty comfortable with that. I'm only looking to add to that position if we get some major dips, and hopefully the structure stays intact and I get to hang on to that position. If things change, I will reevaluate those as it happens. But for the most part, I'm in a pretty good spot right now. I'm happy with my average entry price, and I would only look at these dips as opportunities to buy, because I think the bull is still well intact, at least until we have any sort of indication and confirmation that it's not. And at this point, we simply don't have that. Going to leave it right there for the day, guys. If I see anything else developing, especially any order book here, I will do my best to keep you guys updated throughout the day and night. And we will, of course, be looking at this with fresh eyes in the morning to see how this order book dynamic has changed heading into the FOMC meeting. Now, remember, key thing here, liquidity dampens volatility. And so if we see heavy asks stacking or heavy bids stacking, those are going to serve as guardrails. It'll keep price pinned within that range, at least until the FOMC event is over with, and then we'll see where things go from there. All right, guys, going to leave it right there. Hope this helps you make some better decisions. And if you haven't done so yet, do me a favor, smash those buttons, hit the like, hit the share, hit the subscribe, and drop a comment. Let me know if you're getting any value out of these. Thanks a lot, guys. Here's to Trading Smart. See you again.